The chart that you have seen in this thumbnail is real. It's not fake. You can buy this asset. Those are daily candles. Every day, elephant money is going up. And this is just the last few months. Look at this. We can scroll out further. It's going up and up and up. Since beginning of the year, elephant money went up by more than 500%. Just in the last month, it went up by 67%. How is it even possible to imagine to lose money when a chart looks like this? This is no tiny cryptocurrency. This is growing very, very fast. I've seen a lot in crypto, but I've never seen something that impressive. I mean, just have a look at the total value locked. It's written in big bold letters on the website. $606 million locked up in elephant money. Now, where is the catch here? Things that look too good to be true often are. Now there's a small annoyance here, right? You have to pay 10% tax whenever you buy the token. You have to pay 10% tax whenever you sell the token. But when something goes up that quickly and that consistently, paying 10% here and there isn't that much of a problem, right? You don't have to trade in and out every day when volatility is so low. There is real magic in
up only,
or how others call it,
number go up.
Charts like this have a real pull. You don't want to miss out. Usually, with most assets, you've got price risk. You've got the risk that the price goes down. With elephant money, you obviously don't have price risk, but there must be some kind of risk, right? How can money grow that fast? Is there sustainable revenue underneath that grows every day at this pace, that grows the ecosystem that makes everybody that much money? The issue is the money comes from within. It's a closed loop ecosystem. It's a very fancy closed loop ecosystem, a growing closed loop ecosystem, an ecosystem where the treasury is growing. This here is the balance of the treasury over time. Now think about this from a fundamental perspective. You put in money, so for example, wrapped BNB, you put this into elephant money, and then elephant money does some magic and you expect more wrapped BNB out. Now there's a limited supply of wrapped BNB, right? Wrapped BNB doesn't inflate as quickly. So where does the wrapped BNB come from? Whenever you take out more of that asset, it must come from somebody else. Your profit in a closed system like this has to come from somebody else. And when the price always goes up, when the price cannot deflate, then something else has to deflate here, right? The risk is not, as with other assets, that somebody after you will dump on you, that somebody after you will sell. The risk here is different. The risk is the stability of the treasury. It's how many people will come after you to buy into elephant money. Your returns in a closed loop system like this are 100% coming from people that get into this afterwards. And everybody that's been around in crypto knows the evil P word, right? The way how we call these kind of systems. Not going to say this here, but we all know what you're talking about. Who wins in systems like this? If you want to triple your money, two other people have to lose all of their money. The person that wins is the person that gets in first. This is very counterintuitive to other cryptos. Usually, a crypto gets safer, there is safety in numbers, the larger it gets, right? Bitcoin now is super safe compared to all the other cryptos because it has all of this adoption. So many people are in the system, Bitcoin isn't very inflationary, there's so much support for Bitcoin. But that's different for these kind of P systems. When the participants in a system like this expect very fast profit, then the system has to grow at the same pace. If it does not, it collapses. Inflationary P schemes get more and more risky over time because it gets harder and harder to fulfill that expectation of doubling every 2 months or whatever it is, right? If you're just very small as a crypto project, if you're a new system like this, then things are rosy. There's a lot of potential growth ahead. But if you're already 500 million heavy. Then doubling again gets exponentially harder with time. Usually projects get less risky as they grow, but P schemes get more risky as they grow. It's a system that transfers money from the late adopters to the early adopters. And if you're not in the first 10-20% of adopters, if you're in the last 30% of adopters, you are the exit liquidity. You are not somebody that profits. And it's incredibly hard to appreciate this when charts like this get printed, right? It's only a 10% buy tax, a 10% sell tax. We went up by 50-60% in the last month. What could go wrong? Is the likelihood of this scheme growing for another month high enough? We all know that at some point this will end, but maybe we are still early enough, right? It doesn't take that much. For a system like this to go from 600 million to 1.8 billion is much harder than going from 20 million to 60 million. It's hard to attract capital to a scheme like this at that size. There is eventually a saturation point, and the only way to make money here is to estimate that saturation point in a better way than most other people. And if you can't estimate the saturation point when this thing stops growing, then you simply have to be hyper early in any of those systems. Now with elephant money, are we still hyper early? Probably not, right? Look at this chart over here. This was strong block. And look how it developed afterwards. The token inflation crashed the price. People that bought over here made all the money. People that bought over here very likely lost their money. Or look at this. Tomb Finance. It went from 0.6 cents to $3 just to be back again to 0.6 cents. It went down and down and down after the saturation point. And yes, these things aren't one-to-one comparable because the tokenomics are slightly different. What is a steady compounding for strong block or for Tomb Finance isn't compounding that much in Elephant Finance, it's the price appreciation. With financial engineering, you can make any price happen. You can make the price simply just go flat all the time and compound it very fast. You can make the price go up very quickly, as we see now in Elephant Finance. What you're doing behind the scenes is you introduce risk. You keep the price stable, but you might be depleting a treasury, for example. You make the price rise, but you have more and more unclaimed rewards that once they do get claimed will crash the whole thing very fast. People should know this by now, right? This was Strong Block, this was Tomb Finance. Then we had Horde, for example, that worked slightly different. Here we had again compounding, but with a stable price. So no compounding with a volatile price as with Strong Block or with Tomb, but with a stable price. You got compounded with a stable price. Save money, right? 300% in like half a year or whatever it was on a stable coin, on a coin that didn't fluctuate. But of course, with any closed loop system that pays out returns from new entrants, at some point when the entrants don't come as quickly anymore, then boom! What once was $100 per token became pretty much zero overnight. The largest of such P schemes was probably Terra Luna. And again, a stable coin that then crashed down. And so here we are again with another rally. And when you look at the price, you actually see already a crash that happened before. This was not due to tokenomics though. Apparently there was some kind of hack that drained all the liquidity. We're pretty much at the same price now compared to when we lost everything before. I do think though that we will see a similar crash going forward again. Not because of a hack, but simply because growth stops. Not enough people get into this closed loop system. Don't forget, you want to get out more wrapped BNB than you got in. This is the fundamental premise. You don't just want to have elephant tokens or whatever. You want to get, in the end, when you sell, more wrapped BNB out. But the wrapped BNB supply doesn't grow as quickly. So the wrapped BNB has to fundamentally come from somewhere else. No matter how complex the tokenomics are, the wrapped BNB has to come from somebody else. Somebody has to lose if you want to win. And you have to think very hard, what distinguishes the person that wins in such a game versus the person that loses in such a game? The only difference is timing. Be early and get paid. Be late and be the exit liquidity. 600 million total value locked. Is this early? I don't have a crystal ball how long this show will last. And I don't even have anything against people that knowingly participate in schemes like this. I myself did this. I joined Horde and I made more than 2x on this Horde Ponzi scheme. Now I can call Horde at least a Ponzi scheme, right? Horde was obviously a Ponzi scheme. We made money from this in the premium membership even, right? We calculated the numbers very, very closely. We looked at how big is currently this scheme and how fast is it growing? What would be the potential saturation point? And based on that, we took a calculated risk to bet on this Ponzi scheme, get money from the people that invested late. I did not run the numbers for elephant money, but I can tell you when something is growing for that long of a period, when it's already that big, it's probably not even worth to run the numbers. Instead of getting into elephant money, maybe look at the blockchain, look at who bought into elephant money in the first months. Look at their wallets and check, is there maybe a new system that they are currently buying? Maybe they already exited elephant money and they now get into the next system. That's probably the one to get into. You want to be early. You don't want to be late. Usually size means safety, but not for P schemes like this. Size means death. Don't fall for bad crypto investments. Instead, join our Telegram. Link is down below.